What's up, financiers? It's E of E&L Finance. It's tax season and the best time to start building passive income. In this video, we'll be building two portfolios that you can invest with your tax return of $1,000 or $2,000. But before we begin, please don't forget to smash that like button. It really helps push our videos out there and reach people like us that are looking for innovative ways to invest and build passive income. And if you're new, welcome to the channel where money makes money. It's that time of the year, and for some, that means a tax rebate, where the feds or state refund your taxpayer money. For those that owe money, I'm sorry. You might not like what you're about to hear, but please do stay for a nice portfolio we're about to build. We will build this portfolio on a budget of two scenarios. If you get back $1,000, or the second, if you get back $2,000, as this is the general amount most people see back on their taxes. First up is building a portfolio for those that get back $1,000. Even with $1,000, you can still build a strong passive earning portfolio. This portfolio that we'll be building will be diverse, meaning it will consist of companies from different sectors. There are two types of portfolios that can be built with $1,000. One is when you own individual companies. The second in which you own ETFs, which consist of multiple companies in a given sector. For this video, we'll be building an individual stock owning portfolio and see its return to give you a better idea of how to invest your tax income. This portfolio will consist of 4 companies, giving us a budget of $250 to invest in each of these 4 companies. The first stock we are adding to this portfolio is Store Capital, ticker symbol STOR. For those that don't know, Store Capital is a REIT, which stands for Real Estate Investment Trust. The firm engages in acquisition, investments, management, and ownership of single-tenant properties. They have over 2,500 properties with a 99.6% occupancy of these properties. Store pays a dividend of 35 cents per share. For this stock, with our current budget, we want to aim at buying anywhere from 8 to 7 shares at a price range under its current value. Next up is coming from the pharma sector, and that's Pfizer, ticker symbol PFE. The reason we're adding pharma is because of recent events has shined a light on the pharmaceutical sector, and despite the circumstances, Pfizer is still a company that develops and manufactures vaccines, which means it will continue to profit off of their recent vaccine as demands exceed production. Pfizer pays a dividend of 39 cents per share and has increased this payment every year since 2013. The goal for this company is to gain 8 shares at a price of $29 to $30. The third company is a bit risky because it's in the oil and gas industry, but they have been paying their dividend for over 30 years. This company is ExxonMobil, ticker symbol XOM. The company produces crude oil and natural gases, which it supplies to the United States and internationally. We will want to get 5 or more shares at a price point of $50 or lower, as Exxon pays 87 cents per share. So far, we have 1 REIT, 1 farmer, and 1 company in the energy sector. For the last company in this portfolio, we'll be adding 1 company from the telecommunications sector. Taking the crown for this sector is AT&T. AT&T is not only a telecommunication company, but it's also the world's 3rd largest media company, owning Warner Brothers and HBO. And with the recent launch of HBO Max and Warner Brothers launching all of their 2021 movies on the platform the same day it launches in theaters, we can expect massive growth for their new streaming service. So for this company, we want to add anywhere from 10 to 9 shares at a price point of $28 or lower. AT&T gives a dividend of 52 cents per share. Now, adding all of these companies into the dividend tracker tool, we'll be earning an annual income of $60, and depending on what platform you use, you can reinvest the dividends, which in turn will increase the annual gain. The second portfolio, with a budget of $2,000, will also consist of 4 companies, which would give us $500 to invest into each of these companies with. If you like the first portfolio we built, you can also just take your $2,000 and invest it into the 4 previous companies. You'll be able to gain a lot more shares than those that are investing with the $1,000 budget. The first company starting the $2,000 portfolio is a well-known company in consumer staples and pays a dividend of $1.02. PepsiCo, ticker symbol PEP, has increased their dividend payment over recent years. For this portfolio, we will be able to gain 3 shares at a price point of $130 to $132. The second company in this portfolio is in the banking sector. Bank of America, ticker symbol BAC. BAC pays a dividend of 18 cents per share. The reason we're adding this company to this portfolio is because Bank of America continues to grow as a company along with their dividend payments. Remember, we are building a diverse passive income generating portfolio. We want a mix of companies that are developing and those that are so developed they can continue to increase their dividend every year. For Bank of America, we'll be able to get 14 shares at a price of $35 or lower. Coming in at number 3 is another risky stock because it's in the energy sector. PBF Logistics, ticker symbol PBFX. PBF owns, leases, acquires, develops, and operates crude oil and refined petroleum. They also own product terminals, pipelines, and storage facilities in the United States. PBF pays a dividend of 30 cents per share. With our current budget, we'll be able to get 38 shares at a price point of $12 to $13. Now, before we get into the last company for this portfolio, let's look at the dividend tracker to see how well this portfolio is doing. According to our tracker so far, we're generating $76 a year with a dividend yield of 5.58%. Now, adding the last company on this list was a debate about adding a tech stock versus adding a company that sells tech. We went with the company that sells tech. This company is Best Buy, ticker symbol BBY. Best Buy is a well-known retailer that sells technology products in the United States, Canada, and Mexico. They pay a dividend of 70 cents per share, and with the last remaining $500, we'll be able to get 5 shares at a price point of $100 or under. Adding this to the dividend tracker brings the annual income to $87 with a dividend yield of 4.65%. A quick recap of what sectors are in this portfolio: we have 1 consumer staples, 1 finance, 1 energy, and 1 consumer goods, and allowing this portfolio to reinvest the paid dividends will generate a constant passive income as these companies continue to grow. By taking just $1,000 or $2,000, we were able to generate $60 to $90 in passive income. I know it might not seem like a lot compared to what you put in, but just remember, compounding takes time to grow. Would you like $1 million now or a penny that doubles in value every day for a year? We hope this video was helpful in some way. I know for myself, investing was hard in the beginning, putting that money to the side for future growth, not knowing what the future may bring or if the money will continue to come in. But after taking that first step, it became easier and easier. After seeing that first dividend payment come in, there was no better feeling than getting paid for doing nothing. Thanks for watching, and as always, if you find this information useful, don't forget to smash that like button, subscribe to our channel, and set your alerts to receive more content like this one. See you guys in the next one, and remember to follow the 3 M's. Money makes money.